Good morning, traders. Chris Bus here with Traders Profit Compass with another edition of Before the Bell for Monday, September 19th, 7:48 a.m. as I'm starting the video, getting off to a little bit of a late start this morning. I apologize for that. Don't forget to run your player at 1.5x. So taking a quick look at futures, Bitcoin down 5%, oil down 3%, nat gas down 4%. And equities more or less down 1% to start the work week. Also on the macro front, really not a lot today. All eyes are going to be on the FOMC rate announcement on Wednesday at 2 p.m. I think 0.75%, 75 bips is pretty much the consensus expectation. But of course, a lot, as it always does, revolves around what is Jay Powell's commentary. Will it be seen as relatively hawkish, like no indication of backing off or pausing? I don't think you're going to see that. I think you're going to see more or less a statement to the effect that we're committed to inflation, killing inflation, all that kind of stuff, and not to give the market any kind of breathing room as far as, oh, okay, this is it, or they're going to pause. Now, there is one other FOMC meeting. Actually, it's November 2nd, which is the week before the elections. So I believe the Tuesday, November 9th is the, or is it the 8th? Anyhow, the Wednesday before the November elections, there will be another meeting. So I don't think there's going to be any kind of statement to soothe the markets. In fact, as we've been discussing, they want to implement the reverse wealth effect. So anytime the market goes down, it's all to the good of what their goal actually is. And now we see that mortgage rates, a 30-year mortgage is up around 6.35%, which is the highest in a long, long time. So that's effectively putting a lot of brakes on the housing market. So let's drill through the charts, see where we set up as we start the trading week. Dollar, we've been watching this comfortably above 109. As I've been saying, I think the dollar's headed higher, but any break back below 109 gives the market some respite from tightening conditions. And as you'll notice, during this time, our rising trend line is, proceeding as it always does. And so it won't be too much longer, maybe in towards the first part of October, you can see that the uptrend line will soon be above 109. And I think that's significant because what that'll effectively do is provide a second layer of support. Right now we've got, price action above 109, but soon after this part of the chart fills out, we're going to have a trend line that's above 109. So there will be support above that 109 level, which will provide another layer. And I think it'll just make this move be even harder to break, because then it will have to break both the trend line and lateral support, which is right there at the 109 level. TLT hanging around 108, but you can see we broke back below, we came back up, spent a day hesitating, and then on Friday we had a touch of 108 and then down to 107. Yeah, 107.7. I think the trade now, if you want to take it, or have already taken a position, I think it's pretty simple that you want to be short against 108. And if you can take a dollar's worth of heat, right, 107 to 108 with a stop just above, that leaves the door open for a move lower in TLT, higher in rates. The VIX explored the upper 28s on Friday, but then closed back down in that 26 range. I think we're still range bound here between 25 and 29. A break above 29 would be significant, especially 30. That would leave a lot of runway for the VIX to move higher, or a break below 25 would you would see a lot of green on your screen if the VIX were to break back below 25. And as I've been saying, if you're active intraday, keep the VIX up as one of your charts along with TLT. I think it gives you a great real-time read of what's going on. Bitcoin. I wanted to show you several looks on Bitcoin. I mentioned we were down 5% this morning. Starting on the weekly chart, we had spent a lot of time up here between 35,000 and let's call it 65,000. We dropped down into this trading range here. We said this looked a lot like a bear flag, this action. We got a little bounce, but now we're failing. Keep the pre-COVID highs in mind as a potential target down here at 12,500. Now, if I back it up to the daily, you can see that we're inching below that 19,000. We do have a couple touches down here at 18,000, but I think the trade now is to pivot around 19,000. And if, all hell breaks loose, you've got a target down there of 12,500. And then if price were to recover back above 19,000, I think that's where you employ your stops and just stop yourself out if you had taken a short position right below 19,000. Oil is struggling. We had come up to the declining 20, spent several days there, rejected Thursday, then Friday was more or less a consolidation day, but now today down 3%. So I think you've got to have this 82 in your crosshairs as your pivot for today, because you break 82, then you're down in the high 70s. That's what I would anticipate for oil on a break below 82. NIMO, I think this is something that needs to reemerge for us as important. Why? Because we made our run up to the middle, and now we've come back down to minus 51. If there were to be, some kind of big red day today that would push this, down into oversold territory, then we got to be cognizant of a reversal back the other way. Remember, once the NIMO goes below 60, the risk reward for staying short begins to diminish rapidly, and which is not to say that it can't go lower, because here we got down to minus 100, but then we got the rip the other way. So be cautious. If you had taken some short positions up in here based on the technicals, you may want to think about, well, certainly if you want to stay short, roll down your stops to even money, or roll down your strikes to even money, and you can stay short and see how it goes, but move your stops and your strikes down. Make sure you go to the bank on any of those positions that you have. NASDAQ oscillator, NAMO, not as extended as the NYSE oscillator, but still they will flow together. And if there's a bigger move, this is going to move down towards minus 60. When we look at SPY, I think there's a clear line on the charts to use as I'll just call it a mega pivot, and that's 390. Why? Support, bunch of resistance, support, and then break. So we are below that mega pivot level. And while we can certainly have bounces in here that come up, maybe come up to 390, that would be a line where I would think that it's going to be very tough to get through. Now, if it does get through, then you can be long against 390. But now, all this price action here, from going back in July all the way through present time, all this looks fake. A mega bull trap, right? Because we broke out, came back, bounced, and now we're back below. So everybody that was long in here must either one, certainly recognize that they were wrong, or certainly worried about being wrong, because all these people, no matter where you bought up here, are underwater to a certain degree. So I would really be keying off of 390 on SPY. And we've got micro levels here. You can see we dropped down on Friday. We closed up a little bit, but for all intents and purposes, here's that 390 line. You see the support areas from before. Here it wrestled with 390 a long time before it finally broke. So you got a little level in here about 386 that if it were to break above, you could see a run up to 390. But I think being long at this point, I think you need to recognize your counter trend, right? The trend is down. We're below the 60-minute downtrend line. And so you could break out here. You could break out above 390 and get a push up to the downtrend line where it would most likely fail, I would think. Moving over to the Qs. Here, you can see the big mega pivot line is 295. That's where the original breakout happened. We had a breakout, a back test, then a big bounce. Actually got above the daily downtrend line, got into the 200 here, but then it has rolled over and failed. So now I think this morning you can use 290 as a recapture line that would open the door for a move to 295, but you can also see here that below 285 you lose these two significant volume over price support areas, breaking down below here, you can see how the profile drops away, and then that would really open the door towards the June lows down at 270. So just to recap this today, if we break above 290, I think you can get long for a tactical trade up to 295. But if you're short and we break below 285, if you carried shorts over the weekend and we lose 285, that would be a place where I would roll down. Move your strikes down to 285, even money, and then see if we get a bold move lower. And here you can see just, I don't know, I went mega thick here, maybe just to point out how important that line is. You don't want to lose 285. That opens a big door lower. IWM still above what I consider the mega pivot, and that's 178, right? Resistance, 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 support, support. 178 is your line. You get a break below 178 that sticks. That opens the door for coming down here and at a minimum, I would think, test the top of this gap down towards 174.5, 175. And you can see it here, that 178 level. We do have a gap above to fill right here at 179.50. So if there's a morning push that fills that gap, comes up here into that 182 area, even 183 into the downtrend line, I think that's probably about as much as you could ask for a bounce, because then you'll see, support here, resistance here, and then all of this resistance last week was never able to get above. And then, so that's going to be a mega line of resistance between 183 and 184. Meta continues to fall apart. Here on the 60-minute chart, I've got the Friday lows marked here at about 144. I've got the COVID low mark here at 136.5, more or less. Let's look at the daily chart real quick. Big trading range, couple of false breakouts. What I've done is transposed the width of this trading range down below. That's your measured move target down to 140. And you can see here on the weekly chart, we broke that critical 150 level. And now that COVID spike low is down here, 138, 136, right in that area here. So I believe the trade here is you got to wait for a 150 recapture to really, I think, take any kind of a long position, for a tactical bounce, whatever. But you can see well-defined downtrend line. And if you were to get any kind of a bigger rally up into this weekly downtrend line, I think that's a pretty nice high risk-reward short. Apple also continues to fall away. We had a large move down on Friday morning, and then it kind of rebuilt on the way, for the rest of the day. But all it's basically done is come back down to a downtrend line. I think 150, spot 50 is your pivot for today. and then look for lower prices if this in fact rolls over. You can see the large volume over price bar here. If somehow this made a big rally and got into the low 154s, I think that's probably where dreams die for being long. I think it's just going to be too much right here with this large volume over price bar and all this resistance here across that line at 154. If you were lucky enough or good enough to get a long that went, you got $4 out of it from just say 150 to 154, I would certainly be thinking about taking profits at that level. I want to show you the daily chart here. Here's that line, 150 and a half, 151. Any kind of a stall that rolls over, I think 144 is going to be your downside target on the daily, where this large volume over price bar emerges, and you've got some support levels in here at 144. Tesla continues to look different than many other charts. You can see that where other charts have very decisively rolled over, Tesla remains a pillar of relative strength. Now, it was down, 0.13% Friday, but how much other stocks were down. So this is a real relative winner. I think your pivot is 304. Above 304, you can shoot for these highs at 308, and then above 308, 312. But below 300, then I think it rolls over down towards these lows on Friday at 298. I've been trying to put together in my head what could be going on at Tesla, and somebody in the trading room actually posted a little article about Tesla. Turns out in the last the Inflation Reduction Act, right? They just passed that. There was a lot of embedded monies for EV, and the article explained that Tesla had a lot to gain from that legislation, whether that's EV subsidies or whatever. They had a lot to gain. So that may be this price action may be the result of a anticipated windfall by Tesla as a result of that legislation. But the whys and the what fors are nice, but you got to trade off the levels. So I think 304 is your pivot. Microsoft continues to struggle. Just down a little bit on Friday, but you've got a clear line here at 242. Got to hold that line. Why? Because that's really one of the last stops on the chart as you see price, volume over price really fall away. Let's look at the daily chart real quick. And you can see that 242 level marked the June low. You gotta hold that. You gotta hold 242. And if it doesn't, I think that's obviously losing key levels from above is bearish. That's your sell signal. If you saw a 242 break, I would, you either do nothing or you get short. You certainly wouldn't want to be trying a long there on a break of 242. And I'll just show you the weekly real quick. You can see how important that line is there, and we're testing it now. And I think the next target on the weekly would be 230, and then I would have in mind this level here at call it 215, and then 195, and then 180 on the downside if this thing gets really ugly. But for this week, I think 242 is your key level. Amazon. We had the little breakout here, and then the gap down, and then another gap down. We had made inroads into this gap on Friday, but it really didn't get going. I think today, I didn't look where it was, but if it were to open above 123 and then lose it, that would be a short back down to 121. If 121 breaks, then I think the door is open down to 117 to test the top of this $2 gap back in time. Jumping out to Google daily, we had been in this big $13.50 trading range. We have broken it well below. I think you stay short against 105 and make price prove it. Otherwise, we've got a measured move target of 91.50 on the board for Google on the daily chart. Netflix. Like Tesla, looks totally different than the other charts. And even this morning, we are up about $4 on Netflix in the pre-market. Something is going on. I don't know what it is. I'll just throw out a couple ideas. And again, the whys and what fors are interesting to talk about, to speculate about. But this thing is in an uptrend, and now we're up $4 in the pre-market. That's totally different. You know, when you look across the board and see equities down 1% in the pre-market and Netflix is up $4 in the pre-market, that really doesn't square. One of two things. Somebody thinks there's going to be a buyout offer by somebody, or somebody big is accumulating the stock. You know, a Buffett type, right? Establishing a big position, and then, you know, they come out with their quarterly disclosures and they disclose that they're, you know, they own 7% or 8% or whatever percent of the company. We saw this kind of price action in Oxy, if you remember, that no matter what day it was, you know, all little dips were being bought. No matter what was happening with oil, it just kept going up. And then come to find out that Warren is establishing a position, and then he files paperwork to say he wants to buy even more, and then so there's that. So something is definitely happening. I would think if it were a buyout situation, although people might know, I think in those situations, those people just go out and buy a boatload of calls way out of the money, and then one morning you wake up that somebody's buying Netflix for $300 a share, and then they all make their money. In this type of a situation, it looks to me like just outright accumulation by somebody that wants to build a mega position, and for whatever reason, maybe they think it's too cheap. Doesn't really matter. But we got a $100 gap to fill, and we've got price breaking above this 240. I think if you got a back test of 240 that held, that would be a good place to buy, or a pullback to lower well-defined levels would be a place to buy. I wouldn't go nuts. I wouldn't stake your life or your portfolio on, oh my God, Warren is accumulating, or this thing's going to get bought out. But as long as the price action is robust and counter to the overall market, and you see that strength, wait till price proves you wrong, right? If you buy at 234 and it breaks, just get out, right? Probably going to come back down here to test the top of the gap at 230. So I would be leaning long on Netflix on pullbacks to support, unless and until price proves us wrong and breaks those support levels. So I think Netflix deserves to be on your radar screen. Semis, you got a clear low here at 200, and then you've got a trading range above at 204. I think 204 is your pivot. On a break above, I think you can get to 208. On a break below, comes back to 200, and a break below 200 opens the door to 190. We can look at that daily chart. We had the $14 trading range here. So a break below 204 that sticks opens the door to 190 on a measured move basis, and that would be your prior low back at 190. Quickly through ARKF, you've got a nice pivot here at 1675, coming down with a little uptrend line. You break below 1675, I would think you'd be coming down to 15 on ARKF towards the bottom of the box. ARKG, wrestling with that pivot point again. Breakout from the top of the box, failed. Bottom of the box, held. Top of the box, little fake breakout. Now working its way to the bottom of the box. And one thing you can do here is you could say to yourself, I don't want to mess around with this. Maybe it opens down at 35 in the pre-market. It's kind of tough to take a short there, right? Have 34 alarmed in your system, and then if you get a break at 34 and the market falls apart, then you've got a much better chance for a $3 move down to 31, or if it holds, then you've got a very objective long at the bottom of the box for a potential bounce back up towards 36 and the midpoint of the trading range. So if you got short up here at the top of the box, that would have been very objective, and now you're sitting pretty. I would just hold your short against 36 and see if you don't get the move down towards the bottom of the box. ARK-K, very much the same thing. Wrestling with the pivot here at 43. I would have 41 alarmed. Actually, you could even bring that down to 40, because we got a low here at 40. We got a low here at 40, and we got some traffic down here at 40. So even though the volume over price bar ends at 41, you may want to extend this box down to 40 as being the low target for anybody that got short up here. And then ARK-W, same thing. 52.50 remains the midpoint of this big trading range. I think as long as it's below that, you're looking for 48.50 and then 46 on the downside towards these June lows. So that's where we stand right now. I want to wrap this up without a lot of extra discussion because I'm running late. So get this out to you. I hope you guys have a good day of trading. And we'll see how it rolls out today. This has been Chris Buss with Traders Profit Compass. Talk to you next time.